Welcome back, traders. This is our weekly update on the gold market. Gold managed to stabilize at higher grounds after the yellow metal reached to 1800 in the previous week but failed to surpass it. We must note that overall, April has been a rather strong bullish month for gold. And as we're going through this final week, we may continue to observe the trend holding its ground. This report will be looking into the reasons behind gold's recent price activity and the upcoming events that could increase volatility for gold. Our aim is to be brief and explanatory in order to assist our viewers with useful information. First, and very important, the precious metal seems to be fully supported by the ongoing weakening of the US dollar. The greenback has been on the back foot since the start of April, and the dollar index, which follows the currency's strength, is in a continuous downward trend line. The adverse relationship between gold and the US dollar continues to be displayed and has been rather strong throughout April. On the contrary, however, the economic circumstances in the US continue to improve on a weekly basis. Last week, the US preliminary PMI readings for April improved altogether. Nevertheless, gold's price remained higher and the greenback's fall extended. We could make this even clearer by saying that gold bulls are dominating the scene as the US economy continues to be expanding. Similarly, this was the case in the week before the previous one. It will be very interesting to see how the gold market will react to the upcoming FOMC's interest rate decision to be announced on the 28th of April in the US session. Traders should be aware of this event, as in the past it had produced significant market moving effects that could create opportunities or risks at the same time. Additionally, the event will also be followed by the FOMC press conference and the accompanying statement that could also force sudden large movements for gold's price. The FOMC's comments are taken very seriously by gold traders, and momentary trends could surface depending on the views that the central bank may bring forward, so caution is advised at all times. In the next days, other financial releases from the US will be delivered that could also create volatility for the gold market. On the 29th of April, we get the GDP advance figure for Q1, while at the same time the weekly initial jobless claims figure will be released. On the 30th of April, we get the US consumption adjusted rate for March and the University of Michigan sentiment final reading for April. On the 3rd of May, we get the final market manufacturing and ISM manufacturing PMI, both for April. Finally, on the 4th of April, we get the international trade figure and the monthly factory orders rate, both for March. As a conclusion, gold traders are advised to keep an eye out for the US bond yield market, as the movements observed can drastically move gold prices. At the moment, the bond yield market remains considerably low, which tends to increase demand for gold. Moving now to our technical analysis, please note you are watching the gold 4-hour chart. Gold has stabilized below our current R1 1785 resistance level in the most recent 4-hour sessions. We believe this is a very relevant and considerable level at the moment, not only due to the latest activity nearby it, but also due to the fact that it has been tested mid-April. However, we have also placed higher the R2 1800 round number resistance line that was briefly approached on the 21st of April, indicating traders keep it in mind as a respectable level higher. Our highest level for this report is currently the R3 1815 resistance hurdle. Conversely, if gold is captured by a selling trend, then it could take its way towards our S1 1765 support level that was clearly tested in the past weeks but not breached. Another level that was tested both in March and April is the S2 1745 support line. Finally, our S3 1725 support barrier represents the lowest level for this report and was last tested on the 13th of April. The RSI indicator is currently trading nearby the 50 line, possibly displaying the market may be in a wait-and-see position, anticipating the FOMC policy meeting on the 28th of April. That's the end of this report. We hope you enjoyed it as well as found it useful. If you like this video, don't forget to share and subscribe. Thank you very much for your time, and until the very next time, enjoy solid trading.